Thank you all so much for sticking with us. Really appreciate it. We have one more amazing piece of content, and then this stage is done. It's done until next time. But don't get tired yet. We're going to have drinks. We're going to have a reception. But before that, you have to listen to Krane lead a discussion with Brett Novey. Krane of KCSA, Brett Novey of PharmaCann. Put your hands together. Welcome them to the stage.
Thank you. Thank you. Appreciate it. All right. Hey, Brett.
Hey, Kris.
Good to see you.
You as well.
All right. So I got my phone here. I'm reading questions. I'm not checking sports scores. All right, Brett. Well, let's jump right in. Why don't we start with what's going on federally? There's at this point in the conference, right? We're 2 days in. There's been a lot of talk about safe banking, the MORE Act, Schumer's KOA, or as I like to call it, DOA, because it's going nowhere. But we can come back to those later, maybe. I think people have probably heard enough about that. You know, you and I met to do some prep prior to this trip, and you had some really strong feelings about 280E. Of course, for those who don't know, I'm sure you all do, the IRS tax provision that prevents legal cannabis businesses from taking standard business deductions. But despite all this talk about federal reform, there's been almost no discussion around 280E this year, and even throughout this event. So do you think it's been a strategic mistake on the part of the groups working with Congress to not focus more on 280E? And why do you think that this is one of the most important issues when it comes to federal cannabis policy?
Yeah, so I get why we're focusing on, really right now, the focus of the industry is on SAFE, right? SAFE plus decriminalization. And I understand why we're doing that. And the thinking is that it's important to actually have elected officials get comfortable passing cannabis legislation, not voting on it, not talking about it, but actually passing cannabis legislation, right? So
low-hanging fruit, right?
It should be, but by the way,
it's
it feels like it's not making as much progress as we had hoped. So, but I do think I personally, if I was doing it myself, I would be focusing squarely on 280 because I think it's the biggest issue, it's the biggest headwind that the industry is facing. And obviously, when 280 was enacted, there was never this concept of having a friction between federal and state law around controlled substances, right? The 280 was literally put into place to bankrupt organizations that were trafficking in a controlled substance. And according to the federal government, that's exactly what we're doing.
That's right.
And so from my perspective, here's an example. In 2021, PharmaCann, we should have paid federal and state taxes in the low to single digits of millions of dollars, right? We ended up paying upwards of $50 million in taxes because of 280 to the federal government and all the various states that we operate in. That's $50 million that should have been reinvested in jobs, capital improvements, expanding our business, paying our employees higher wages. And I think that the biggest opportunity is if you eliminate that expense, it's going to give us an opportunity to lower our costs, to lower prices to customers, and we'll be more competitive with the unregulated market, right? So there's all these benefits to addressing 280E, but I feel very strongly personally, and my biggest concern is we're making this concerted effort. It's very important, the privilege we have as cannabis operators. We're making this concerted effort to shepherd small business owners, social equity companies into our industry, okay? But in doing so, we're taking them away from their existing industries and their current well-paying jobs, and we're putting them in a position where they could literally get bankrupted by federal and state taxes. And so I struggle personally with that conflict. And I think we need to talk about it more openly. We need to educate everybody on the issue more openly. And we need to go to the Hill and advocate for reform. Otherwise, it's going to do what it was intended to do, which is basically completely squash the entire industry.
Yeah, I mean, I've heard you refer to it as an existential threat. I mean, do you think would you categorize it that way?
I do, and you get in situations where, right now, the majority of businesses, and especially small businesses, are funding them. They're funding operations through third-party investment, right? Because the operations aren't self-sustaining because of this punitive tax code. They should be self-sustaining, but they're not and so folks, especially small business operators, have to make a really tough decision, which is financial ruin or not pay my 280E tax obligations, right? And so then you get into the whole conversation around, well, you have to replace those taxes somehow. But to me, that's just a huge fallacy because, first of all, like I just mentioned, there's a lot of small business owners, in my estimation, that are not paying their 280E tax because they've made the decision that they don't want to, as opposed to facing financial ruin, they'd rather not pay those taxes and kick the can down the road.
Take the risk that they don't get audited.
Exactly. So the pool would expand if you eliminated it. You could easily replace it with some sort of excise tax, right? So just making this up, a 3% excise tax. I think people are saying the industry is going to be $26 billion this year. So that's like almost $1 billion, 3% on $26 billion in excise tax, and that'll be more than offset by the reduction in the price of our product to consumers, right? Because it's a huge expense that comes away from operators like us. And I think the last piece is then we're gonna create, the industry would create that much more tax-paying jobs, head of household jobs, right? So to me, it's
payroll taxes,
exactly,
income taxes.
And so to me, it's really it's something that we should be talking about and advocating for and educating people on. And to me, it's the number one most important thing that we could do as an industry.
So I'm going to move on to PharmaCann here in a moment, but I'll put you on the spot quickly because there's been so much talk about what's going on, and Congress is here. So we'd love to hear what's your prediction for where we wind up at the end of the session.
Yeah, same thing as everybody else. I mean, I don't think I'm to be any smarter than the masses, right? So safe plus decrim probably sometimes around the midterms.
All right. I hope you're right. Well, I hope we get more, but we're not going to because the votes aren't there. So let's move on to PharmaCann. And we'll talk about some industry trends as well. So one state that I know you're really excited about for PharmaCann's business is New York. And there's a lot of excitement these days about New York and New Jersey in particular. So what is it about New York that is particularly attractive to a company like PharmaCann?
So New York should instantly be the second largest legal cannabis market in the world behind California, right? And then if you think about full steady state federal legalization, it should be top 4. And you could debate California, New York, Florida, Texas, etc. Also, New York, we were one of the 5 original licenses in New York. We actually have the #1 cannabis license issued in New York, which is pretty cool. But
you have that framed in your office?
It's electronic. Yeah. I would frame it if I had it though. But so back in 2016, the world was a lot different for this industry. We made a conscious decision to overinvest in New York because we believed in the long-term value that would create for our shareholders. We saw the opportunity, and we built a 130,000 square foot cultivation and processing facility, and we fully optimized it operationally when there was 1,000 patients in the state of New York, right? And New York was historically one of the slowest progressing medical cannabis markets ever on record. So we've since expanded that facility. We're looking to relocate our retail dispensaries. We've been active in the state and in the market for 6 years, and we're positioned based on all the work we've done for the 6 years leading up to today to be #1 in that market. And we think it's going to be a massive market. We think there's going to be a massive opportunity for us as an incumbent, particularly on the wholesale side. And we're looking forward to the opportunity to showcase that to everyone.
It's very exciting. As a native New Yorker, I'm really excited to see this all roll out. What about challenges in New York in particular? Are there challenges that you're seeing or foreseeing that you think people might be overlooking in all the excitement and exuberance around the state?
So the challenges are abundant, just like any state. And it's interesting, overlooking, I would say no, because they're right out in the open, right? If you were to take a stroll through Washington Square Park, you would see folding tables full of cannabis being gifted, right? So New York made the classic mistake of decriminalization and possession, decriminalization of possession limits and consumption prior to rolling out the regulated market, okay? And so what that's done is it's brought sort of the unregulated market very visible, right in front of your face, and very aggressively gifting cannabis. You know, they're not selling it, so they're getting through a loophole by, you know, Kris, give me $100, I'll sell you this T-shirt, and I'll gift you 3/8 of cannabis along with this T-shirt I sold you for $100. So that's very prevalent in New York right now. A lot of people are not optimistic about the state's ability to. Everyone's worried that New York's going to turn into a California. We do not believe that. The state and the regulators have acknowledged the issues. They've actually already started to take steps to address the issues. You know, they issued like 52 cease and desist letters to illicit operators. They're incentivized to help transition the unregulated market into the regulated market from a tax perspective. And we're very confident that they will. It'll be a process. It'll take time. It's not going to be overnight, but we feel very confident that it will happen.
Well, I can say, as someone who grew up as a teenager in Manhattan in the 90s, like selling weed in Washington Square Park is it's nothing new. So when we met last, you described New York as one of the legs in a three-legged stool approach that PharmaCann has for 2022.
Yeah.
So I'd love to hear you talk a little bit more about this approach. What are the other two legs of that three-legged stool, and why is this so important to PharmaCann this year?
Yeah, the three-legged stool analogy. So we've positioned ourselves. Obviously, growth is essential in this industry. You want to have several different avenues of growth, and so we sort of have three different avenues that we're pursuing right now. The first leg of the stool, the first leg of the growth stool, is Colorado and Michigan. Okay. So two of the top three markets right now, two of the top three legal markets in the industry, and through our acquisition of LiveWell, we've positioned ourselves with the number one leading market share operator in both of those states to pursue a 20% share. Our stated goal in both Colorado and Michigan is to achieve a 20% market share in those two states. So what does that mean? That means about $800 million in revenues just in those two states, and we have the foundational assets and the team to do that. Nobody is positioned better than us in the world right now because of our acquisition of LiveWell to accomplish that goal in the next 24 months. So that's one path. The second path is, and by the way, I view that as pretty unique to PharmaCann. The second leg is transitioning our legacy medical markets to recreational markets. We just talked about New York. That's a great example. So 50% of our existing markets are medical today. Mm-hmm. So we still have half of our states that we operate to convert over to adult use. Now, that's not unique to us. Obviously, everybody that's in those states with us has that growth trajectory as well. And the third leg is entering markets that we don't currently operate, right? Like a lot of our peers, especially a lot of the larger public companies, are operating in several of the states. We're only in 8 states right now. So when you think about some of the biggest markets and some of the most opportunity for a company like us is going to be to expand into a Florida, expand into a New Jersey, expand into a California, a Nevada, a Arizona. That's a lot of growth for us in those states as well that we don't currently operate. So that sort of separates us apart as well. And when you put all three of those together, and then you layer on top of that our strategic partnership with Cronos and Altria, we feel like we are very uniquely positioned relative to all of our peers in the industry to capitalize on exponential, to basically have growth above and beyond sort of normal market growth for the foreseeable future, the next 60 to 72 months.
And this is without going to new states, right?
Well, it would include new states too, but yeah.
Sure. But just with what you have, and well, let's save that because we're going to come to this in just a minute here. I actually want to come back to something else you were just talking about here. We've heard a lot lately about giant mergers in the space. There's been some very large, very public mergers announced in the last few months. But PharmaCann pulled off a pretty major one with that LiveWell acquisition, and I feel like it's flown a bit under the radar relative to some of the other acquisitions that we've heard about, and sort of mega mergers, mega acquisitions we've heard about in the space lately. So I'd love you to dig a little bit deeper into why that acquisition was so important for PharmaCann, and how does that impact your growth strategy? We've heard a bit about Colorado and Michigan, but how does that impact your growth strategy over the next few years and outside of those states as well?
Sure. So LiveWell addressed one of our greatest areas of opportunity as a company, and they were very aligned culturally to us. And so that was the primary reason. And so when I say the biggest area of opportunity for PharmaCann, we started by winning licenses. We were a bunch of accountants and attorneys that applied in states and won licenses in Illinois and New York. We had never grown cannabis before anywhere, not even a single plant when we were in high school. And so we had to learn that. And that's the most important part of this entire business, right? And so you had a bunch of attorneys and accountants trying to learn how to grow cannabis at scale consistently. That was a work in process. LiveWell is the low-cost cultivator and manufacturer of high-quality cannabis in the most competitive markets in the world. And they're number one in both of those markets, okay? And they think like us, and they act like us and behave like us and share the same values as us. So that was a no-brainer. And I'm very pleased that we're taking that expertise and we're overlaying it on our legacy operations, and we're already seeing massive improvements. We think that we're going to more than double our yields from our current facilities, which obviously means our costs are going to halve, right? And so we're really, really excited about the LiveWell acquisition from that perspective, but also, the acquisition model, the financial modeling exercise made sense as well. And then also the last piece, which we already talked about, was the ability to continue to expand in those two of the top 3 markets in the world, right?
Absolutely. I mean, I can imagine that not just in those markets, but as you said, I mean, you've got a lot of legacy operations in some really key states, Illinois, for example, and I can imagine bringing in that level of operational expertise and efficiency at scale is just going to help take you to another level in all of these markets.
Yeah, and that was one of the first things we did, right? So in my opinion, I've seen a lot of cultivation facilities since I've been in the industry. In my opinion, and I am biased, but I think LiveWell's Michigan facility is the best facility I've ever seen. And
Big
so
words.
The first thing we did, like I mentioned, we're undergoing this massive expansion project in New York, taking our facility from like 130,000 square feet to 250,000 square feet. Their team came in, reprogrammed everything. So now our New York facility is going to look a lot like their Michigan facility when it's all said and done in December of this year. So we're really excited about that. We think that, thank you. We think that we're going to have the best product in New York State.
I love that, and what I really love about this is we so many times when we hear about mergers, it's all about dots on a map, right? It's matching this asset portfolio with that asset portfolio. But in this case, you're actually talking about a merger that impacts all of your operations, right? It's about operational efficiency, and I think there's often not enough thought to that. So I applaud you for thinking more than just about how do our assets match up, but also how does our operational expertise match up?
Yeah. I mean, that was a big part of it, right? Obviously. So, and we're super happy with the progress.
Excellent. So let's come back now to some of the other places. You mentioned some of the growth states, the medical states that still have room to grow. You're in places like Ohio, Pennsylvania, Maryland. So what is your strategy in these states, and how do you think about states like these that are currently medical but have a clear line of sight to flipping to adult use in the foreseeable future?
Yeah. I wish Jeremy Under, our head of government affairs, was here, because we literally had a meeting about these timelines last week, but I forgot. But so we're thinking that Maryland could be a back half of 23, and then I believe Pennsylvania, New York is obviously, we think, January. Mm-hmm. We think Pennsylvania is a 24 event, And then Ohio is likely a 24 event as well. So in the next
22.
Yeah, in the next 24 months.
Yep.
We believe that the other 50% of our portfolio will make the transition to recreational sales, and you know, we've done it. Illinois was the first time well, I shouldn't say that. Massachusetts was the first experience. Got a little bit better at it in Illinois, and we'll get even better at it in New York. And every time you kind of make that transition, you improve upon it. So I think we'll be able to fully capitalize right out of the gate on sort of that surge in demand from adult use day one.
Awesome. So I got one more question for you before we get kicked off the stage here. You know, we hear a lot about the, you know, quote unquote big cannabis companies, particularly in the media. You know, you hear sometimes the big four, right, in the sort of the cannabis Twitterverse. But PharmaCann's name is not usually mentioned in that same company, and yet PharmaCann has pretty quietly built the largest private cannabis company in the United States, if not in the world. So as a private company, has that given you the ability to fly under the radar a bit? And how do you think that that's helped with the growth of your operations?
Yeah. So just the reason we're the largest privately held is because all the guys that were bigger than us went public before us. So
Fair enough.
So that's, you know.
But you could have too at that time, and you chose not to.
That's true. That is true. But so yes, we think, especially in market environments like what exists today, it's extraordinarily helpful to be private for us. And we're very closely held, high concentration ownership of smaller group of investors, and we don't have to get caught up in all of the you know, the quarterly earnings calls, the analyst calls, making sure that we're publicly press releasing, you know, every little material bit of information that happens at the company. It allows us to focus on our operations, and I really appreciate that. And because, you know, I don't have to get distracted by things that aren't improving our operations every single day, which is helpful, and it's going to benefit us over the long term. For example, this LiveWell integration is a great example. You know, I've been very hands-on, very intimately involved in that integration, and I'm not getting pulled away to do other sort of external events. So 100%. And the other thing I like about there's pros and cons, but the other really nice thing is that we are focused on long-term shareholder value, right? So we don't have to worry as much about making decisions that might benefit the next quarter, because we're 45 days away from reporting that quarter. We could make decisions that benefit 2, 3, 4 years from now. And all of our investors that invested in PharmaCann knew that was how we were going to approach this business and this industry. So we've been very measured, very balanced, a keen lens on ROI of any investments we make, and our investors, it was very clear to them all along because of New York, right? So I feel like our investors are comfortable in the position we're in today. Would they like liquidity? Yes, it's been 8 years, but I feel like it has been helpful, especially the last 12 months, to be a private company for sure.
Having been the president of a publicly traded MSO myself, I'm quite jealous of the flexibility that you have there. So thank you so much, Brett. This has been great. I appreciate the time, the conversation, and congratulations on all of your success.
Yeah, thanks, Kris. Appreciate it.